Morning guys, it's like from KispaFX and I'm bringing you a brand new video on a quick tutorial which I done here showing you guys how to place your stop losses. I've been receiving a lot of questions from different people, students, non-students. How do I determine where I should place my stop loss? Now guys, before you even enter a trade, you should know where your stop loss is going to be. You should know where your target is going to be. If you don't know these two stuff, it's like you driving with a never-ending road. So you have to figure out where you are going to place your stop loss, where you want your target to be, and you have to respect and go by what you plan. So as you can see here, I've got a Aussie Swiss trade which I've gone short at, and we are in fact 15 pips into profit. I could see this market going onto the downline and reaching the next significant event area, which is at a price level of 0.74385. The reason why this is my target, guys, is because the market has previously used this price level as a resistance, as we can see here. If we break down to the daily, there is more space and more room for the market to go down. It could potentially go down to this next significant event area where we could see the market has previously been acting as support. Now, I will be chasing this area. This area will be my target, but as I move along, I will be locking in profit, meaning moving my stop loss. Initially, before you even enter a trade, guys, you want to know where your stop loss is going to be. You want to know where your target is. If you don't know where your stop loss is going to be, if you don't know where your target is going to be, then that simply, means that you don't know what you're doing. Because if you did, you'll have a heading and you'll have a stop loss. Okay. So in terms of risk management, on high probability trades, I'd risk from 2 to 3%. On low probability trades, I'd risk about 0.5% to 1%. Okay. Now, the way I set my stop losses, guys, I usually do my analysis on the daily, 4 hourly and weekly, but then I do have to step down to intradays to set my stop loss. Now, what I look for previous price levels and previous last swing highs or last swing lows. And that's where I place my stop loss. As you can see here, the market initially started declining. It started this nice downtrend, which I could see it carrying on. And we can see that the market made a lower high at this level. At this point here, let me just mark that in. The market formed a lower high. And as we can see in this price area, the market previously did act as a resistance for a short amount of time, for a short amount of span. So, this would be a very nice optimum level to place a stop loss. And, an entry would be right below the break of this lower high, which is exactly what happened here. This was a pending order entry. And we can see that this stop loss is 10 pips away. So it's not really about the pips, guys. It's about you finding out where that significant event area is, where that last swing was, and you setting your stop loss there. Now, as the market declines and as the market moves down, it's going to be making these swing points, these lower high levels. And whenever the market does go down and create these new swing points, you'd want to move your stop loss lower and just place your stop loss at these swings. Because the market, you don't know what the market could do. The market could be in your favor in 1 second. The next second, it could be going against you. And the only thing that's going to protect you against that and save you is your stop loss. In fact, if you don't have a stop loss, you will wipe your account out. And that's, that's guaranteed. Without a stop loss, your account will be wiped out, guys. So let me just take this further. So let's say, for example, the market is downtrending. And as we said previously, when the market downtrends, it forms lower highs and lower lows. So let's just start off an initial, decline. Here's a market, a downtrend. It forms a lower high. That's its first lower low here. That's a lower high, lower low, lower high, and then a lower low. Okay. As you can see, this market forming, a downtrend, it's downtrended, it's formed a lower low, now it forms a lower high. Now an optimum place to enter would be at the break of the previous lower low. It will be at the break of this area. So, you could in fact set a pending order around this region, which is usually about a 63% Fibonacci retracement level. So you could go ahead, set a pending order there, and you'll go ahead and set a stop loss at the last swing high, which is this level. Okay, so this level here will be your entry. Let's just get rid of that. Let me just mark this in. So this area here will be your entry, and this area here is where you'll be placing your stop loss. Okay, now as the market keeps playing that role of declining, as we can see, the market declined heavily here. You can then ahead go and move that stop loss, which was in this area. You can then go ahead and move that stop loss to this region. Okay, and that's you locking in profit. And then every time you go down by 1-2%, you want to move your stop loss down and just keep locking in your profit, because you know, if a market is trending, if you're going to trade and you're not scalping, we're talking about long-term trades, you want to hold on to those trades and you want to be locking in profit as you're moving down. You know, you want to be moving your stop loss and just, you know, keeping up with the market and taking as much as you can from the market. Okay, so I hope this video was clear. I hope everyone understood. Guys, if you do have any questions, don't hesitate to message me on Facebook. My name on Facebook is Abdullah. Follow my page, KispaFX. Do subscribe, do like this video, and don't hesitate to message me for any help you guys need. That being said, I wish everybody a happy trading day, and I wish everyone the best.